nothing has changed for markets in last 1 month. Incrementally, if you really think about it, the deep bulge actually seems to be there in some of the mid and the small cap stocks. So what do we have on the Nifty? Very flat start with no bias per se. The breadth has done phenomenally well, and the breadth is doing exceedingly well today in terms of the market open as well. The small and the mid cap indices are off to a great start. I want to mark Adani Group of stocks. Is there any reaction? The pre-open rates were indicating there would be a minor nick here and there, some volatility here and there, but I will not use the word panic. I think this is more like a knee-jerk reaction and hardly a reaction, 1% here or there. You don't use the word sell-off here. I think markets in a sense have now matured enough to understand the real positioning of Adani Group of stocks in terms of leverage, in terms of their debt profile, in terms of the ability to raise capital, the fact that promoters have sold, there is no liquidity crunch per se, which is what some of the concerns were, and I think all those concerns have been allayed. So markets are just not reacting to the new sort of reports or allegations which have been raised by a Soros-backed entity. But breadth, I think, is the talking point, and I think breadth is once again looking very, very charged up.
Yeah, the breadth is looking charged up. The Nifty not doing anything, so nothing changes really in our lives. In the last 1 week, Nifty has done nothing, but it's okay. We're not complaining. BHEL, that's really been the star all through this week, and they've bagged another order from NTPC for a thermal power project in the state of Chhattisgarh. So let's revisit that stock, 1.25% higher. Remember, yesterday it was the hotel names which really bounced up. I mean, across the board, Lemon Tree, Chalet, Indian Hotels, massive move in the entire sector. And today too, most of these stocks are seeing some buoyancy kick in. I just want to revisit what Sula Vineyard is up to, because reports are indicating that there is likely to be a massive PE offload, a stake of about almost 12.5%. And I think that block deal has already happened, 3.5% lower on Sula as we speak. There's Maruti also. Was a winner yesterday. JP Morgan is now placing Maruti on a positive catalyst watch, so look out for that stock. And maybe Dish TV too, wherein JC Flower, Yes Bank, ARC has reached a compromise now with Subhash Chandra. We don't really track Dish TV that much, not high on liquidity, but 3.5% is where that stock is. And I think that block deal has happened on Sula. That stock is in highlight right now, down as we speak. Geo Financials, once again, multiple block deals and the stock locked in upper circuit. Let me quickly take it across to Naresh, find out what are the first trades that he's punching in. And I'm sure, Naresh, it's not a trade on the Nifty, because once again, it's a flat start.
So not on the Nifty, it's on Mahindra and Mahindra. The stock is close to a new 52-week high and an all-time high. It looks promising for the short term.
Look who's there in our studio. I'm actually pinching myself. The Samir Arora. Hello, sir. When Samir Bhai is in the studio, it's always has to be band, baja. No barat, but band, baja.
Or khana.
And khana.
Just look at khana.
Because we only get hot water.
I will do something. अभी बाद में दिखाएंगे, पहले आप खिलाएंगे. आप मेरे को दिखाते हैं आपको पहले. चलिए. Samir Arora in the studio. Let's welcome in style, the Punjabi style. Let's welcome in. Saying you still look the same because of
I've lost 7 kg. आप क्या बात कर रहे हो?
चलो आज हाफ केजी बढ़ाते हैं. चलो आज आप आज आधा किलो बढ़ाते हैं. Yes, the vada pav for you.
There's lots of lovely snacks, so go for it today.
Nikunj,
we only get water. Samir comes to the studio and vada pav comes.
ये तो मैं नहीं खा रहा, ये मैं खा सकता हूँ.
अच्छा चलो.
But that's healthier, by
the way. Just speaking Hindi.
I thought brown cookie or something.
No, it's all Indian delicacies. I will tell you, yeah. We've got a lot of stuff.
I think it's thali piece.
ऐसे मेरी image क्यों बनाई हुई है आप लोगों ने?
अरे भाई ये तो बढ़िया है.
Shocking. That's a good image to have.
Yeah. But no mirch in the markets right now, looks like it, Nikunj.
See, Aman, if Swat speaking Hindi now.
Yes, that's what Samir Arora does.
चलो पंजाबी तड़का लगाते हैं. पहले बात करें या पहले खाना खाएं?
First, let's talk.
Let's talk. So what are we talking?
Whatever you like.
Open-ended.
Open-ended. So, आज stocks की बात करते हैं. We'll talk about in general mutual fund आ रहा है. When is it coming?
So we have applied for the flexi cap, and if it comes on as per regular this thing, then hopefully end of October, before the Shera.
So Diwali is the big launch for
It should
mutual
close
funds.
before Diwali.
Well,
Because the auspicious period, I believe, is the क्या होता है Navami.
Yes,
Navami. So
Navratri.
Navratri or Navami, whatever. Yeah. So in that range sometime.
How will this fund be different
From?
from the ones which currently are there? Apart from the fact that you are there.
Well, actually, the thing is that if you look at historical performance, they are very different, so there must be something different. But the difference in philosophy is very high, which is that we are basically not willing to make trade-offs in stocks. I think the whole industry does trade-off. What does that mean? That if a stock is very good, has good history, doesn't matter, we'll pay a very high valuation. Or if a stock is poor history and everybody knows it's poor more or less. It's not that only we have discovered, but they'll say it is very cheap and discounted. So effectively you are doing a trade-off between different factors which are supposed to help a fund do well or a stock do well. Sorry. We don't do trade-offs because we have realized that so many stocks do well that there is no need to make a trade-off. So you could be rejected on one factor. So the end result of that is our at least past performance is materially different from the crowd, but our cost of error is low because we are rejecting even for a single excuse which might be to somebody else too small. But we have figured out that so many stocks do well that if suppose I think that a stock will do badly and it ends up doing well, what goes of my father? Because so many stocks are doing well, ki chalo one which I thought will not do well ended up doing well.
Was that the rationale behind ITC when you first bought into it?
No, ITC though we bought, so that's a positive. We're talking about the ones we don't buy thinking that you will do badly and you end up doing well. So according to us, all the times, by the way, we show this in one of our presentations that nearly no fund, nearly ever, has got even the performance which the 150th stock of the index has.
So there's no FOMO, you're saying? when it
Correct,
comes to
because there's so
loans.
many of them.
Yeah.
Imagine that if you just rank last year's rank, the 150th stock was from the index, and you're not talking about some non-index stock, was up 16%. Which fund, general diversified fund, was up 16%? None. In the 18 years, I have only managed to get the 150th stock performance 3-4 times for the full fund. And really nobody ever gets it, or once in a while somebody gets it. So that means so many stocks do well. So if so many stocks do well, why bother about FOMO? You could use that for Tata Motor if you so desired. That it doesn't matter, you are not going up alone. So let me choose my factors which I like, and maybe 10 stocks I thought will not do well. So in theory, there's 140 more that are going up and I can choose from that, but I don't need to compromise. I think that is the big picture.
But since you talked about it being a flexi cap fund, is there a bias that you have right now, given that mid caps are the ones which are at an all-time high and maybe some value in large caps right now?
We don't know that. The fund manager will decide, but broadly in a big picture sense, if we look at our history, it'll be 50 to 60% large cap. Because, we like the big fellows, which is the banks. And
which are not doing anything
No,
right
that
now.
is good. That is, you are storing something for the future. Means you have to keep chiseling away. So the good thing is now mid caps.
They're charging.
They are charging or waiting, like in a relay, you're waiting for your turn. There is no way that if you believe that flows are coming in from domestics and from foreigners, that one day plus minus a few months it won't happen.
Most of the banks are quite proud of their retail growth. Even PSU banks are now saying that we want to move towards the retail growth. But if I look at the construct of the economy, whichever alphabet you want to use, the economy can be divided in two parts. Urban India are doing very well, semi-urban and rural India under stress. So my question is that if retail franchises of banks are doing well, then how come that is not captured in the real on-ground demand?
Because you yourself just now said that the rural is not doing well and the urban is doing well. And mostly these loans are going to urban guys or to the salaried guys or to the guys who are earning more. And also we are not saying, and nobody is saying that this is forever, that the rural is gone forever, then then elections would be decided on these things. So we are talking right now in a big picture sense that if you look at the fact that the banking sector is strong and doing well and hasn't done anything for at least now calendar year and maybe even some part of last year, and it's a big part of the market, and you are getting foreign flows, and you can buy things like HDFC Bank at 3-year-old prices. It is the easiest thing for the world to do. And in whatever way you say it, if somebody is overweight or underweight, they will buy maybe 25% financials.
Yes.
So if you think foreigners are coming in, then 25% they are buying, and actually for the tech and others they are making decisions, yes, no, or for consumer they are making whether it's too high valued, low valued compared to their own. Financials is the easiest for them also to buy.
Yeah.
And from the domestic side, if we are saying domestic flows will be strong, you are supposed to deposit 10% with HDFC Bank every time you raise $1. You can't. These technical things will get sorted out, that mutual funds had too much, or they crossed 10, or that the FIIs, including me, bought more thinking that MSCI mein aayega full weight, and it didn't come. So all those extra thodi speculation had to be unwound. But broadly, the concept will remain.
But since you did talk about elections, when will the market start building in the pre-election narrative?
See, I don't know exactly, but first of all, we don't know the date. Now people are saying
Next
it's now.
year.
नहीं अभी तो आया ना कि in November, December में कर देंगे, which Mamata Banerjee and a few others have said.
but that
वो नहीं
is
होगा
also
शायद. So then the issue will be कि if the state elections are not in favor of BJP, then will the market immediately say that these two things are different, which they are.
Right.
But will everybody say that let me hold back a little bit? So actually next 4-5 months I think are aimed
play out.
at making us invest our mutual fund properly.
I don't know if these goodies came via Zomato, but I know that is a stock that you'll look at very closely. But recently there have been so many IPOs hitting the market, but I believe that you've said that they're very overpriced. What's the view?
So on Zomato, may I say that you were the first guys we told when it was 52. The thing is, when it is falling every day, to come and say that we own it or we've just bought it, rather than now when everybody is buying it.
Are you selling it now then?
No, we are not selling now because अब वो ठीक है, वो Blinkit की story बना रहे हैं. अब चलने दे सकते हैं क्योंकि it is in proper this thing, and they are doing well. So on the new IPO now, I haven't seen all of them, but the ones which our fellows saw, broadly they are like that drone fellow and all. It's too much.
Why there's so many block deals happening? Just so many block deals, promoters after promoters.
Beyond anything.
Beyond what does that mean?
But this is showing the appetite of the foreign investor on the other side, because the seller is also mostly foreign in these. The
even promoters are selling this.
promoters,
but
yeah.
PE guys mostly, let's say. And the other side is the domestic, and they feel that you won't be able to buy it on the screen because they're slightly liquid, or the size of the Indian industry has become so big. We never had it in our alliance days when I was the biggest mutual fund manager in the private space in equities. So it is just the size. But main thing is that you are supposed to have this kind of in every market. Because for example, if we just take for granted, if somebody says GDP of India will grow 7%, let's say, we don't question, we say, yeah, good. But that 7% GDP growth implies so many things.
Yeah.
That roads will be made, that new investors will come, that capital will be raised. So 7% kahan se aayega? But when that happens, we take it as if it's over and above the fact that we had already, without questioning, accepted the 7%. It's like the IT guys. If an IT guy comes and says that I will grow 8%, we say very good. Then next day he announces an order. You're supposed to have that order, otherwise you're not growing 7%. Yeah. But we take these as an additional piece of good news. So the fact that more investors are coming, more demat accounts are opening, I don't think is supposed to change the returns of the market. It is needed as it becomes bigger and bigger and bigger.
And IT then, you just touched upon it, glass half full, glass half empty, because there have been these order wins, the deal ramp ups, and yes, we have seen that spate of underperformance. Has that played out?
I think underperformance is ended, but because we don't have it, we are not getting frustrated because of these Paytms and Zomatos and landmarks or whatever else is working for us. If it pained us, we will worry. Right now, let it be. It's not worth the effort of selling something, because we have to sell something to buy.
So it's not one of the first who got out of IT completely. I mean, for Samir to go IT
so
zero was
initially
something.
that worked. Now it is neither hurting nor affecting at an index level, but it's still underperforming all these slightly different stocks. But so Samir, therefore, it's right now we are not thinking of it so actively, just because we are doing well and everybody is doing well, even if they don't have it.
You're still resisting the temptation. You can take
No, this I will have after.
Yeah, this smell, I'm dying to dig in after.
I can have this one. I can just show it to the audience.
We can take a break.
That's bread.
Bread
That's the healthy one.
Enjoy, have a bite.
Mostly healthy.
Okay, let's split the IT space into two: the traditional business
And the newer guys.
and the newer guys.
Newer means the
so-called the
The
SaaS
new age
guys, the
tech.
new age tech. When I say new age, the specialized IT companies. You go to MapMyIndia, go to RateGain. These are
So
specialized.
those we have, by the way.
Those
We
you
have KPIT also and we have RateGain also.
Okay.
But
So
we
you-
don't have these regular
The
TCS,
typical-
Infi and HCL
The
Tech and
services.
all that.
But within that, Samir, I can divide that traditional model into two parts: the old business and the new business. The old business is something which will grow at 7-8%, and the new business which will get challenged because of AI. So old business is a function of what happens to the US economy, and US economy is making a comeback. Beginning of the year and now, the outlook for US macro has changed. So will that incrementally change the way how OT cycle will
The
move?
thing
now?
is, I don't think those company things have changed. You know, simple thing is look at the hiring of these fellows. They are not hiring. They themselves don't believe. They are not honoring their school commitments or whatever.
Yeah.
So फिर अब वो अपने आप ही they are showing
Cash
to
rich
you.
balance sheets. Cash rich balance sheets.
So then why are they acting like this? Why are they negotiating salaries of a starting guy by saying give another exam? I don't have to give names of all these fellows. I mean that is also otherwise. What does it show about their own confidence?
Helios is hiring what, right?
Huh?
Helios is
Helios is hiring more than Wipro is hiring because they're net negative.
That's why I asked you this.
But what are the contra bets in the market? Is there anything contra right now or undervalued?
My
you
number
think?
one holding is Contra, HDFC Bank, which hasn't done anything
That's
for
also
3 years.
there.
Consensus
Yeah.
has become contra. Can you imagine HDFC Bank being called a contra call? What
For
times are
3
we
years,
living?
zero return.
What times are we
And
living in?
still
The darling
number
of the
one.
market has become a
But by the
contra
way,
bet.
we met them, they have come to Singapore. I think they are very good. Let's see.
What is the consensus bet then?
Consensus bet might be ICICI then in that case.
What about Geo Financials?
Geo Financials, if it went to some 180, I'll buy. See, we just made a thumb rule that for the Reliance shares, we can give them, say, 10-20% discount. And for the cash, you give them, say, 2.5, doesn't matter. And that is the price. But you can't give a premium for the Reliance share. That Reliance itself is a good company, and then you give another premium for holding it. Another.
And it was always part of the balance sheet. Earlier, for the main Reliance,
Yeah.
treasury was always part of the
Maybe
balance
not that,
sheet.
just simply. So it is because who knows beyond that? But it will do well is one part, but it will hurt many others is another part.
Is there a frenzy, Samir, in defense railways? Or the orders are justifying what the stock prices are showcasing?
I don't like railways or I don't like anything where government is a big customer. But defense we own because defense there is no choice also. And you might, because there are only 3-4 of these companies, you are not really winning on L1, you are basically being assigned these orders. So you might get paid on time because the government views you as basically their arm.
Yeah.
So if you have to make the next thing, But the railway guys getting orders and all, I have this simple thumb rule. Okay, let me ask you. So my big picture thing is that in the end, many of these guys don't get paid on time, so therefore they are hurt. But according to me, the guys who get paid on time get doubly hurt. Why?
I don't know.
Because then they bet up and take even bigger bets and then they don't get paid on time. In the end, they are not getting paid on time. If you are lucky, if you don't get paid on time the first time and go away and find something else to do. So I would
Samir,
not
you
do
will
it.
say all these things and move back to Singapore. We have to live here.
No, my problem is that all the things where I've done badly in the last 15-20 years were where something went wrong in their order, in the payment, in their winning an arbitration, in something. So now I say there is no need. 150 stocks do well. Let 10 of these also do well.
Yeah.
And it's fine to
We
be.
still 130. How
give a
many
miss.
the 35 we want only 35-40 stocks.
So, this has been a new learning for me.
That-
So I'm sharing with you that how to look at investment through time frames. It's been new for me. And the data what was shared with me was that 90% of average Indian who's participating in the stock market has a time frame for less than 1 year.
Okay.
5% is between 1 year to 3 years.
Oh, this was that SEBI data.
I mean, someone shared
वो
with
जो,
me.
but usme the only angle is that most, because the real action started after 16-17 on the terms of the SIPs and all. So if you see newer data, it might not be what somebody told me in reply to that.
No, fair enough. SIPs have really started. So SIP is somebody who's a direct investor, but technically is not actively trading on a daily basis. So let's look at the mindset of somebody who's active.
Like a ETF
Like
investor.
an ETF or for example an HNI investor, they have time frame for less than 1 year, 90% of the folks. 5% folks are in for 1 to 3 years and rarely like 2-3% of Indians are beyond 5. So let's categorize that.
This is investing into a stock or into
Stock,
a fund?
stock.
How much?
Broadly, that's how the activity patterns brokerages are telling us, right? They look at demand and look at delivery.
Mutual, correct.
Right, that's how it
Could
is.
be.
So when you are investing, वो एक साल वाला हटा देते हैं, sub 1 year, you will not be there. You would be in 1 to 3 and you will be in 5 year plus.
No. So my theory is that the long term is very difficult to see.
Okay.
And the long term, the number of stocks that do well are very limited.
In long term, the number
Long
of
term
stocks
means because the same fellow, many people do well over 1 to 3 year period, but then they are not able to sustain. So somebody else starts doing well or a new sector. So that we all believe, and you also believe, I think, that private sector banks have created a lot of wealth. Only 2 stocks: HDFC Bank, Kotak Bank. There was Global Trust Bank and Times Bank and Bank of Punjab and Centurion Bank and RBL Bank and Yes Bank and God knows all private sector banks, and they've done very badly. Bandhan also has not done super well. But looking at the older guys, so the point is that the long term is very difficult to see, and you have very low ability to see the long term separately anyway, because if people say that we know that this is such an obvious thing, do we know that when Steve Jobs died, his biggest investment was not in Apple, it was in Disney shares, because he had got it for selling Pixar, and Disney shares yesterday hit a 8-year low. So in 2011, why didn't Steve Jobs sell all his Disney which he got and convert them to Apple? Because he didn't know. You know that Bill Gates owns less than some 15-20 billion of Microsoft out of his 150 billion net worth.
Buffett doesn't own Microsoft.
But the biggest stock is, but वो तो कहेगा चलो technology I don't own. Because nobody knows. But what you know is over a 1 to 3, 4 year period. So you look at the long term as a series of 1 to 3, 4 years. If it does well, you will hold it. If it doesn't do well, have a nice day and you move, because that visibility is there. And a simple answer of that is Warren Buffett. One second, Warren Buffett. He owns Apple, but 1 year before Apple, he bought 10 billion of IBM. Why doesn't he hold it?
He sold out.
Because it didn't do well. Mr. Jhunjhunwala must have bought 50 stocks. 6 worked. And some others may have also worked in between. But 6 worked and he kept them. So it's the same thing with our fund, that you will buy with a 1 to 3 year view. And the ones which work, so now I say I own HDFC Bank from beginning, but I don't even remember. But 100% I would have bought 3 of these other banks, but sold them after a year. Or so this idea of going in, I am owning a 20-year stock, no.
So what's looking good from a 1 year perspective and what's looking good from a 3 year perspective?
No, 1 year, 3 year का मतलब है कि मेरा मतलब not literally 1 year, because that broadly medium, short, whatever you want to call it.
Don't deviate now. You answer her question.
हाँ तो खाना भी खिला रहे हैं भैया.
घुमा रहा था, इधर उधर घुमा रहा था. So
not possible. We would have come back to it.
So 1 to 3 years, I like what I was telling you, that the advantage of looking at a 1 to 3 year at a time is that you will not like highly valued stocks, because a highly valued stock you justify by saying, since I'm going to hold it for 20 years now, it's discounting, over 20 years, the fact that I paid extra premium doesn't matter. But if you look at it 1 to 3 year, you will have to in theory assume that after 2.5, 3 years, you might have to sell. So P का आप वो नहीं कर सकते हो कि अभी 50 है, उस वक्त 50 रहेगा. Sorry, that अभी मैंने 70 ले लिया, doesn't matter, because after 20 years it become 30, like one of your other guests does all the time. So, many guests. So the point is, whatever we are owning, like for example, today we say we are buying these K economy stocks, which means rich man stocks. Like in India, Landmark Motors or something. Or
Vedant Fashions.
और वो चलो वो middle का है. Landmark is really, और वहाँ पे US में आप या मतलब globally में ले लो Louis Vuitton. So that doesn't mean that 1 year later or 2 years later some rural will not improve. But when it improves, up 5 stocks out of 40 you change. What is the big deal? That's the point.
You said Geo Financial at about 180. Anything else that you're looking at that when it hits this price?
No, just because Geo is very easy to calculate like this. Normally life is not so straightforward. This is like an SOTP of shares and a business. That's why it is so clean.
Where do you think there is strong storytelling in this market? You know, brokerages, they call you every day, this is the great idea, this is the big picture. Where do you think the storytelling is very strong?
Storytelling has really failed in the last 2 years. And fortunately, because we don't believe too much in these stories. One story was that there is no limit to valuation of a good company.
Yeah.
I mostly shorted all of them. Even now I'm short half of them in another fund. All these 70, 80p growing at 10, 12% and not this year. For 10 years growing at 10%.
Yeah.
But because they are very good quality companies. The other storytelling which has quite decently failed and rightly so is chemical companies trading at 40 and 50 times as if they are some levers and Colgates of this world. Although they are also doing badly. The levers and Colgates. But this idea that, because the reason other than SRF we missed all these chemical companies is because we are not used to giving 40 multiple for some fellow making. So all those, at least in 2 years have done quite
You think urban
badly.
consumption is storytelling or there is merit in it?
Urban consumption, give examples of names.
For example, hotels, cars,
So
watches.
hotels we own, but hotels is not storytelling, but it might be near the end.
Okay.
Yeah.
What about the other luxury categories?
I can give you some examples because I'm staying right now in a hotel and what the rate.
Oh, I thought you had a house in Bombay.
No, I live in Trident. Only.
Okay.
So the hotel rates are, a cricket ke liye they will go
Yeah.
for
They
some
jump up.
time, but after that it's okay.
We were discussing Aisha.
But it's not storytelling, but it's like an, it's like hit the peak. I own both, so I'm not sold even one share, but I'm just saying big picture. I think 6 months here or there.
We were discussing yesterday the Cricket World Cup aa raha hai. And imagine if India, if it reaches semi-final, if it's in final, if they win the match, what kind of excitement we will see. The amount of pizzas which would be ordered, what will happen to hotel rates, what will happen to the liquor sales. That could be a nice little theme, right?
That's what I'm saying. But I'm saying the hotel and all will be all in one quarter, and then suddenly there will be a massive. So this quarter, of course, because we G20 next week khatam ho raha hai, and then the cricket will be there. But and also it's peak season, the December.
Diwali, Dussehra.
But uske baad kya hoga ki baat ho rahi. Ye quarter to chalo will be good.
Yeah, like in
Did
the
you
US.
manage the World Cup tickets?
I'm
sure you're coming back in October.
I'll be here, but because we have to sell our mutual fund, go here, there. Let's see how much time we will have. The only thing we said is that we won't, because mostly our matches will be on Sundays.
Yeah.
So we won't travel on Sunday to go and for a meeting on Monday. But now 2 months are a bit different work.
So we'll have to catch you more in India next time.
That time I have 2 months I'll be here.
So let's block our next interview with you. And you're also a very avid reader. So anything interesting you've read?
Yes, right now I'm reading a book which twice in 3 days, not now, but about 15-20 days ago was recommended by Elon Musk. It's called Destined for War.
You are reading Elon Musk's recommendation.
Oh, that recommendation has to gel with you also.
Okay.
So it is Destined for War.
Because he recommends a lot of things also.
So anyway, this book appealed to, but book is very good.
Yeah.
It is at how China and US basically are destined for war. It's called the Thucydides trap, something long story.
Can America and China escape the Thucydides trap?
Yeah, Thucydides trap. So in that, forget about the story, but the big picture is that reigning power and ruling power nearly always have a war.
Okay.
So they have identified 16 such things.
So
situations.
you give us a synopsis
and
on Twitter.
In 11 cases there was war.
No magic trick before you disappear from the studio?
Magic trick is you give money to the mutual fund, boom, performance.
That's a good one.
Good pitch.
All right, Samir, pleasure as always having you with us in our studios. Cameras will be off you, so enjoy your vada pav and all of the other snacks.
You're not telling anybody. You're not calling your wife and telling her. What Samir ate today?
Okay, that's pretty enlightening. So good to have you in our studios. That's a view coming in. Lots of stock recommendations as well as market view. But I think we need to shift gears now and put the spotlight on what's happening with Sterlite Technologies or STL. Given that the BharatNet tenders are on the cards, is that going to aid the company? We've got Ankit Agarwal, the MD, joining in. Ankit, thanks so much for taking time out. Now, recently, the government has approved this 1.4 lakh for the next phase of the BharatNet. Have any tenders been floated? And if not, as and when they are floated, can you just tell us what kind of potential order flow it would give to the company?
Yes, good morning. Thank you for having me on the show. So I think it's a very exciting project, which is really spearheaded by our Prime Minister. The intent is to approve, as Cabinet has approved, about 1.4 lakh crores. The intent is to cover all 6.4 lakh villages across the country. So it's a massive undertaking. So far, around 2 to 2.5 lakh villages have been covered. So almost 4 lakh villages need to be connected, and very clearly by high-speed quality fiber. So that's something that is a big project for the entire industry. STL has participated in the first phase and second phase both in terms of supply of fiber optics, supply of the cables, as well as large-scale fiber deployment, and then now maintenance of the networks. So this is something that is quite positive. We are also very well placed in terms of our capacities on the fiber optics, but also in terms of our deployment experience to take this project forward. In terms of timing, probably in the next few months, the further details will get released. And certainly looking at the government's timeline, they're looking at probably between 2.5, 3 years to deploy this fiber optics. And then after that, probably 7 years of maintenance.
Okay, fair enough. Now, recently, the government also imposed ADD on the optical fiber, cable fiber. Post that, are prices at par with domestic players? And owing to this, how much of the demand shift are you expecting now on the domestic side?
Yeah, so it's a good question. I think it's a very, very positive move by the Indian government and Ministry of Finance and DGTR to take this forward. So we really appreciate their efforts to recognize the dumping that was happening, particularly from the Chinese, Koreans, and from Indonesia. And then post this, there has been dumping duty that has been levied for a period of 5 years. This is again positive development for the Indian manufacturers, including ourselves. From our perspective, this is still early days. We'll continue to watch in terms of the pricing in India. But certainly the expectation is that there should be lower dumping now from these countries. One thing I would highlight is a very recent example which has happened in Europe, where after there was anti-dumping from Chinese players applied to Chinese players from Europe, they found that in fact Chinese continue to dump and absorb some of the dumping margins. And in fact, recently, a couple of weeks back, Europe has doubled the anti-dumping duty on the Chinese players. So this is something that we're watching for, but we are positive that they should support the pricing. And overall, the other point was there was also low quality fiber coming into the country, which would impact the quality of our networks over the next 20, 30 years. So that's another area where we believe it's important to minimize this low quality fiber coming in.
Okay, fair enough. Also, if you could just update us on how fiber prices are trending on a month-on-month or on a year-on-year basis. Has there been an uptick in prices?
As I said, so far it's been stable, which is good. I think from a demand perspective, certainly all the announcements around acceleration of 5G is positive for us. We are a key supporter of the 5G deployment in India, both for Jio, Airtel, as well as for other internet service providers in the country. And on top of that, as we see BharatNet starting to roll out probably from next year onwards, I think that's another positive trigger. The third part that I would want to touch on is the hyperscalers and the data center players. We believe there'll be close to $6 to $7 billion of investment from large players, that we see investing in India and building large-scale data centers. They will start requiring a good amount of fiber optics dedicated for them, for low latency and high quality networks that they require.
Now, telcos are nearing 5G coverage. So how many of these orders have you received so far? How much are you expecting going forward?
Absolutely. So we won't be able to specify, but I think we are very, very active. Just to give example, with some of the operators, we actually partner with them over 10 to 12 circles, large states across the country for both their long distance fiber requirements, as well as within the city for fiber to the home, fiber to the enterprise applications. So this is something that we've been very, very actively partnering with them. We actually see that probably next 4 to 5 years, we do continue seeing demand for the fiber optics, because one is just coverage, but from my own perspective, the actual capacity that 5G promises in terms of speeds as well as low latency, I think that will still come through even more over the next 3 to 4 years. And we need probably 80 to 90% of our towers to get fiberized, which is currently only 30-35% currently in India.
There has been a slowdown in North America that led you to cut your FY24 guidance. How are things moving now? Has demand revived? And other than North America, how has the demand been in the other geographies?
Yeah, good question. So I think that still continues. We're watching it closely in terms of our conversations. Happy to share, we recently announced a partnership with a company called Windstream as part of their wholesale division is doing large-scale fiber rollouts So the partnerships continue, but as we shared in our results, there is significant inventory in the US across the board, and as the customers continue to pare down that inventory, probably we think it'll take another 4 to 6 months at least. And as that inventory comes down, then the demand in US should come back. We have set up capacity as well in the US in terms of our cable capacity. So that's being viewed quite positively by US customers. And it places us well once the demand comes back. In terms of other geographies, we already touched on India, which I'm positive about. But Europe, other places of Middle East and Australia continue to be looking strong.
Okay, what about debt? Because that's been a concern. How much do you see your debt lowering by the rest of FY24, and what will your leverage stand at?
So I wouldn't call it a concern as much as a focus. We are focused on reducing the debt, taking our net debt to EBITDA to 2.5 times. I think that's an important focus for us. We are probably paying around 350, 370 crores of interest per year. So the clarity is definitely there to focus on fewer businesses, generate cash, and then reduce our interest costs.
Okay, and what about the services business demerger? Can you walk us through the rationale of that, and what's the timeline in terms of when you expect this process to complete?
Yeah, absolutely. So as we shared recently, the whole thought process has been that essentially we have two separate types of businesses. One is focused on manufacturing, high-tech manufacturing of optic fiber cables and accessories, where we largely serve global markets, including Europe and US. Which is focused on manufacturing. And then the services business is more in terms of network deployment and system integration, which is more, say, working capital heavy. So these are two very different businesses in that sense, and only overlap being in India. So from that perspective, we thought there would be different financial profile, there would be different investors, and also from the employee perspective, these are different skill sets. So that was a thought process to take the demerger forward. Currently, we believe that it should happen by Q1 of next financial year.
All right, good to have you. Thanks so much for taking time out. Gotten a lot more clarity on how business is shaping up. So thanks so much for those details. All right, lots lined up, so let's get straight to it. It's interesting to really understand what the latest reports have been indicating when it comes to some of the large private sector banks. Attrition levels have gone through the roof, we understand, close to 34 to 46%. What is the reason for this? When will we see a cool off? Is it only banks, or are we seeing this across sectors? Ramani Datti is the CFO at Team Lee Services, and she joins in to give us a lot more clarity on this. Thank you so much for taking time out. So to begin with, a lot of these banks off late, especially those in the private sector, as per reports, are seeing a lot of employees quitting. I understand that one bank has even seen an over 50% attrition. What is your assessment of this trend? Why do you think it's happening?
Yeah. So we are seeing very strong hiring trends across all non-IT sectors, be it BFSI or consumer, telecom, pharma, healthcare. Across all segments, we are seeing very good hiring trends. So job seekers are finding a lot more opportunities. So that's one of the factors which is leading to high attrition. Having said that, in IT overall, we expected the attrition to come down to very minimum level, but there also we are still seeing attrition at an average level. I think that's also because of the fact that GCCs are still hiring. While IT services, the hiring is completely on hold, except placement hiring. New hirings are happening across GCCs.
So I was actually touching upon banks, and I wanted to get in your take about banks, because that's where you're seeing an over 50% attrition. A lot of employees have been leaving. So what's your assessment on what's happening with the large banks?
It's mainly with overall increase in hiring within BFSI sector, within banking sector, because across all private banks, the hiring numbers are really picking up, especially over the last 2 quarters. Even our pipeline for next 2 quarters for BFSI segment is looking very strong. So with more opportunities, especially across sales, customer support, credit card recovery, across these profiles, we are seeing more of attrition across the segments.
Do you think that there is a marked shift in the mindset, stickiness, commitment levels of younger talent, or is it that companies don't need as many employees right now within the BFSI sector specifically?
No, in fact, companies are looking for more and more open positions and more candidates. So it's only from candidates' perspective, they are finding a lot more opportunities, be it within the banks or within other segments. They have more opportunities opening up, and also with the festive season ahead, there are new positions opening in consumer and other verticals. So that is driving attrition. Banks are still, the number of open positions across all of our banking customers are at all-time high.
I'm looking at the data which comes from the annual report. I mean, this is data in the public domain, and I'm looking at data from Kotak, HDFC Bank, IDFC Bank. Do you think this attrition number should not be compared with what, let's say, we see in IT? Because every time we see this fat attrition number which comes from IT, it makes you worried. Do you think for banks, historically also, attrition numbers will always be high? Because that's the nature of the industry, which is churn here.
Exactly. These two industries are not comparable at all, because typically the attrition in BFSI banking segments happens mainly at the entry level. So where it's typically the credit card sales and customer service, calling activities, those kind of profiles, where attrition is quite normal. Depending on the seasonality and higher open positions in other segments, sometimes the attrition can be much higher than what it was. But whereas in IT, it is also related to the overall recession trends and the new projects that are coming for the IT services companies and hirings in GCCs and other startups. A lot of other factors drive the IT attrition. So these two are not comparable.
The number which we look at is the cost to income ratio, or the employee cost. And that number applies even for banks. So can I safely infer that even the attrition numbers are high, there is no case for a huge change in terms of the wage cost or the employee cost for the BFSI space? Can I assume that?
There is a steady increase in employee cost for banking clients, even in our case, which is nothing unusual. It's the annual inflation impact that we are seeing. Other than that, we are not seeing any substantial change, especially in the entry-level staff cost. So that has remained more or around 25,000 average salary per month per employee.
Before the word AI was introduced to the world, IT companies were hiring very differently. Now that AI is part of companies' DNA, even IT DNA, what has really been the substantial change? And I'm going to break it for the benefit of our viewers. When the digital platform migration happened, everyone thought this is disruptive for IT. But big IT companies were able to adopt and retrain their employees to take advantage of the digital wave. Do you think the same could happen because of this AI wave also? Rather than attrition, it would be maximization?
Exactly. So that's our view. In fact, in discussion with our IT clients, so that's what we are also learning, because they need a lot more staff to be trained and upskilled for the AI ML technologies. And even to develop those technologies right now, they need a lot of entry-level workforce, especially 0 to 4 years entry-level staff. So we believe that at those experience profile, more and more hiring will happen to support the AI ML technology implementation across their clients.
Thank you for joining in. So, yep, that's the view coming in with respect to what we're witnessing within the entire private banking space, as well as overall hiring levels. All right, let's put the spotlight then on the new kid on the block, and that is Aeroflex Industries. As we watch out for the overall listing today, do remember that there has been quite a bit of spotlight on the company of late. A strong debut is what the street as well is anticipating this time around, largely on the back of the fact that we have seen pretty strong demand for the subscription. You've also got a strong focus on exports, which is what the street as well was liking. It's been a relatively small issue size, and that has generated quite a bit of interest in this company that could potentially contribute to pretty strong listing gains. And given the fact that we're expecting it to be a fairly healthy listing this time around. So that seems to be what the consensus is, a strong debut, Nikunj, and given the fact that there has been quite a bit of fervor as well in the primary markets for Aeroflex.
I must confess I've not looked at this one very closely, so I just want to reserve my comments there. Sometimes you miss few IPOs, and I must honestly confess I don't try this one.
So many of them.
Ashish Kacholia and some of these large investors as
You
well.
just
which
missed
is-
it. I mean, I must
yeah.
confess it. So sometimes you don't know, you should admit it openly. That's what I always
Yeah,
do.
but at least going by the indicative price, it seems like it's going to be a big bang move, considering the issue price was 108 and it's already indicating a 75% premium to its issue price. So it's, that's surely set for a great debut. There's a small block deal as well, which has happened on Bharti. One didn't realize that Bharti is now sub the 900 price point, actually. 0.2% equity has changed hands. 853 is the tick on Bharti right now. But back to Aeroflex, 108 is the issue price. It's a small issue like Avan, flagged off. The total issue size is only about 351 odd crore rupees. And you can see the entire top brass of Aeroflex on the podium right now. While of course it did get a phenomenal response from the market, the QIB portion subscription was about 195 times, NI portion got subscribed about 126 times, retail saw about a 34 times subscription, total aggregating to just a little shy at about 97 times. And there you go, that's the first gong for Aeroflex Industries listing of the day, and it's a gap up start there. 72% is the kind of premium that it's listed at to its issue price of 108. That was the issue price, so from there it's been a bumper start. But on to the promised interaction with Debashish Chatterjee, CEO and MD at LTI Mindtree. My colleague Anisha had an exclusive chat about the BFI segment, the company's aspirations to hit that $10 billion mark before 2030. Let's hear out this exclusive chat with them.
In terms of the ramp-ups, there were kind of very specific scenarios with specific clients, and those are easing off slowly. But overall, we are very optimistic about BFSI. This is one vertical, one industry where we are very strong, we are very focused. And overall, if you talk about innovation, this is one industry where the innovation happens right up front. So we are very hopeful and we continue to be very optimistic about BFSI.
So no cuts in spends or no like a massive budget cut or anything that you're witnessing, right?
We have not come across any budget cuts. We have not come across any major cancellations. The only thing which we have come across are slowdowns. And as I said, we kind of live in a very paradoxical times. There are deals which we have won, but we are not able to ramp up the way we wanted. So those are the things which we hopefully they will ease out over a period of time. But otherwise, I don't think there is anything to be concerned about.
So DC, that was about the BFSI vertical specifically, but then there was some worry about high tech, retail as well, that was showing signs of slowness. Does that continue?
Well, I think if you look at the industries in which we operate, most of the industries are doing okay. There could be cyclical things from time to time, but BFSI and high tech particularly are those industries where we are betting quite strongly. Even if you look at manufacturing and even if you look at consumer goods, it's a lot of focus right now. So overall, I don't think there is any concern in terms of specific industry. There could be some slowdowns from time to time, but overall we are in a good place. So
structurally, there's no slowdown. There could be transient issues, but sure, go on.
No, it is a transient. I mean, I would say it's a transient thing which we are seeing, but I can only say that it's a very interesting time where every client is behaving in a different way, and even within the same industry, two clients are not behaving the same way. But we are dealing with that.
Well, I'm sure LTI Mindtree knows how to deal with that because you've been doing that for many, many years. But just, coming back to the point, apart from BFSI, North America is also a very important vertical for you, right? Given the fact almost 70% of the business comes from there. And there at the start of the year, we had seen this sudden drop in terms of business. People were not spending too much. But has it changed now? Because all that, worry about a hard landing has changed to soft landing, to probably no recession. Are things incrementally getting better?
Well, I think North America continues to be a strong market for us. I think what we have to understand is the kind of deals that we are working on have changed. If I look at a year back or even 18 months back, most of the deals that we are working on were transformation. And and through the pandemic, the transformation kind of accelerated. But in the last 1 year, we have seen that most of the deals are kind of cost takeout or efficiency led. So that's the only change that we have seen. If I look at my pipeline right now, most of my deals are led by efficiency. But there is also an interesting phenomena that's happening. Many of the clients who have been doing a lot of transformation, they don't want to completely stop the transformation. They want to slow it down, but at the same time, they are looking at cost efficiency or cost takeout or efficiency deals, which will kind of help in terms of funding the in-flight transformation. So that's the interesting phenomena that we are seeing right now, and there are quite a few deals that we have already won in that area, where we are not only helping the client in terms of the efficiency, but also helping in terms of funding the in-flight transformation through the efficiency measures. And that's something which is happening in North America as well.
Yeah, no, that's the interesting bit that was visible in your earnings as well, because while everybody was talking about the revenue slowdown a bit, the deal win momentum was very strong, right, even in the quarter gone by. But there was also this fact that the decision making was also slowing down a bit. What's your take in terms of the deal pipeline that is there right now? Would you still say it's very robust, and the conversions as well in terms of deal wins will continue to be high?
Well, if you look at overall deal pipeline, I would still say it's very robust up to our satisfaction. But we have to also understand the opportunity that we have. The opportunity that we have is post the merger, LTIMindtree becoming one single entity. And again, if you look at the overall vision that the group has, Mr. Nayak has, SN Subramaniam has, we have been always talking about how do you mine the clients, how do you build strategic logos, and that can only happen through cross-selling and upselling. And that's what we have been focused on, and that's working out very well. So when you talk about deals, you have to look at both the aspects. And I think, yeah, the overall, we may not be seeing a lot of large deals being shaped up, but we can shape some of the large deals as we go along with our existing clients.
That's interesting, but given the fact that you're now looking at larger kind of deals, and LTIMindtree, as you said, together is now seeing a lot more, it has become eligible for a lot bigger deals, but that's opened up a lot of competition as well. And now you're not just competing with, let's say, just the top 5 in India, but globally as well, Cognizant, Accenture and the likes, and everybody else as well. Does that mean that pricing is becoming a bit of a problem for the industry? Competition is high, limited amount of deals?
Well, first of all, even when we were erstwhile Mindtree and erstwhile LTI,
you were still competing with the biggies.
We were still competing with so there's no change in that. It is just that we are much more formidable as we are at this point of time in terms of size and scale and capabilities that we have brought together. But I don't think there is anything to, at this point of time, there is anything to worry about pricing per se. It's fairly stable.
So then, fair to say that 17 to 18% margin band by the end of the year?
Well, we have said the 17 to 18% exit rate. That's what we are aspiring for by end of this, by Q4. And, we have a plan. We have a very specific program within the organization to improve the margin, and that's why we have made a commitment that 200 basis points over the next 4 to 5 years. We are pretty much on track.
Okay, so you talked about 17 to 18% margin, you're on track to that, but there was also this aspiration of $10 billion, right? Right now, what, you're sub $5 billion? When do you see that happening? 2030?
Well, I think it will be before that, but the aspiration holds still, the aspiration is very much there. And again, it's the aspiration of the group, our group chairman and Mr. A.M. Nayak, our group CEO, Mr. S.N. Subramaniam. I think they have very clearly articulated this plan. And
they've given you this target that DC you have to achieve this target, right?
I think, it is not me, it's me and my team who have to get it done. And I think it's achievable. And if you look at the overall aspiration they have been very supportive in terms of what we have done so far and what we want to do. And I think this 10 billion mark has to be a combination of organic as well as inorganic. And I'm very confident that given the credibility that we have in the marketplace and the credentials that we have, I'm sure we can do it over a period of time.
So you've baited me with 2 questions. First up, you're saying earlier than 2030. So what, 2028, 2025?
It's earlier than 2030.
That's all I'm getting from you, right?
Well, it depends on, as you can understand, the industry has gone through a very tough year. So you don't have those controls. But you need to still have an aspiration, you need to set a goal. And that aspiration is pretty much there. In fact, right now as we speak, we are working on a strategy in terms of how to get there. Now, if you have a strategy, then you need to execute to that strategy as well. And now there could be ups and downs, there could be slowdowns, but overall we will be on target in terms of, we will definitely have an aspiration to get there.
That's good to hear because, we started off this year hoping that there'll be a double-digit growth this year. That looks challenging right now, but at least in FY25, do you see that coming back, or do you think that entire era of seeing that double-digit growth is not going to happen and the industry has become mature at, let's say, 8 to 10% levels?
Well, it's difficult to call out like that, but there are certain things that we aspire to. We want to remain agile and nimble. We want to definitely have a profitable growth story, and we want to have a growth which is in the industry leading quadrant. So keeping all those things in mind, if the opportunities open up, there is no reason why we cannot again go back to the double-digit growth. But we definitely want to be in the industry leading quadrant.
And you said that the growth will be both organic as well as inorganic. We recently haven't heard much on the inorganic side, especially because you are going through this mega merger.
Yeah.
What next? Anything in the pipeline?
Well, I can only say that the integration was most critical for us.
True.
And if you look at, we announced the merger 14th of November last year, and in a record 6 months, 7 months time, we have kind of completed the entire integration, bulk of the integration. Which was very important because we had to take the go-to-market strategy. I mean, there has to be single, LTIM1 as we call it, single set of solutions, single set of capabilities which we should take it as to the go-to-market as a part of GTM strategy. Now those things have all happened. I can only say that there is a team which is working in the background all the time, looking at opportunities. And if there is a right opportunity in terms of, which will help us in terms of getting into or fulfilling some of the white spaces in terms of capabilities or geographies, we'll definitely make it happen.
But anything specific you have in mind? North America, Europe, India,
we are
any
open.
Specific vertical?
We are pretty much open.
Okay.
I mean, just to give you an example, we are late starters in some of the industries like a healthcare, life sciences. So if there's an opportunity over there, why not? But it is not restricted to only those two industries.
We're talking about how the company will reach that vision of $10 billion, and I'm sure for that you also need the fuel, right? And the fuel is going to be the talent, which has been a bit of a problem area for the industry over the last couple of years. But do you think that entire, grand resignation and great resignation wave is over and attrition has slowed down?
Attrition has definitely slowed down quite significantly. But, I have always believed that if you look at the next few years, the winner will be those who will get the talent strategy right. And we are spending a lot of time in terms of getting our talent strategy right. And you talked about GenAI, for
Correct.
example. So we have programs launched within the organization where we are going to train everybody on GenAI.
Everybody means the entire talent
Entire
pool?
population over time you need to, because there are certain things which you have to do across the board. Unless you do that, you don't get the benefits. We have already started training in batches. So we have also got a center of excellence formed. So all these things are part of your upskilling your workforce. Now that is something which is going to be very critical as we go along. So attrition we are not too worried about at this point of time, but the biggest focus is how do you retrain your workforce in the skills that are required for the future.
Yeah, no, sure. But that's one of the things which has been a problem area in terms of the industry as a whole. And the reason is also said that the companies don't invest enough. Even at the starting, salary package, it continues to be very low at 3.5, 4.5 lakh levels. And that stayed like that for the last 10, 20 years for the industry. And that's why the attrition is very high at lower level. Do you think there's something that the industry needs to change as a whole?
Well, I can tell you what we have been doing. We have rolled out a very clear role-based organization structure, which means that right from the day one, when you join LTI Mindtree, you have a career map which is available for you. How can you rise in your career? And of course, you have to start at a certain point, that's an entry level, but if you have the right skill set, right capabilities, then you can also rise faster. So that's something which we feel as being a role-based organization can help in terms of helping people to rise, helping people to flourish if they're the right people, if they have the right capabilities, and if they can unlearn and relearn new things, if I can say so.